Today, I have a fabulous topic, building a book that stays, turning a one-time client into lifetime revenue. And I'm thrilled to have Brian Koss, who's regional manager at Movement Mortgage. Brian has a long history in mortgage banking and head of sales, starting at the World of Countrywide, moving all the way to Mortgage Network. So hi, Brian.
How are you, Pat?
Good. This is a fabulous topic. It's incredible to me, but I actually saw a survey and we'll start off talking about that first. And the survey said that 80% of the customers after 2 to 3 years don't know who their loan officer is.
Astounding. Astounding.
Yeah.
And we were just talking earlier about we've talked about Dave Savage, and Mortgage Coach was a big user that
Mhm.
I've worked with Dave for many years, and it was that you are a debt manager for life. And for
Yes.
people to say you're my customer and then they never reach back out to the client is a lost opportunity.
It is, and it's such a basic, and it's not well done within our industry, even at originators that are what would be perceived as somewhat successful. And it does seem as if we're still stuck on the old ways, which are my company will send out birthday cards, anniversary cards, all of the things that are rather passive and impersonal. And so I know when you and I were talking, we were talking about the phenomena within our mortgage lending world now about the legacy programs where people are
Mm-hmm.
wanting to sell their books. So talk to our listeners today what you're seeing and what this is all about.
There's a lot of conversation about that, thinking, you know, how do I keep who would be interested? It's a shame that I've built up this book of business and then
Right.
this watch it go away over the years because they maybe don't stay in touch enough. But also that thinking that I do get these repeat customers, but you don't realize how many people are leaving you. And now that data's out there, right?
Oh,
So
yeah.
it's just that you think that they're yours, but they've refinanced two or three times with somebody else,
Yeah.
and you don't know that. So the opportunity exists now to have track clients for life. And if you had stayed in touch with your book, you could track about your pull through ratio. And if you wanted to have someone
Yeah.
take it over, or in essence, sell or invest in your book, you
Yeah.
could show them how active that book is, what kind of turn it gets, how many referrals you get from it. It would be worth more for some younger person to, in essence, invest into it and want to, quote, buy into your book or at least take it over. If you want to make them interested, the fact you've been doing it 30 years, but you can only show the three people come back to you on a regular non-refinance here, where's the value, right? So
Yeah.
it has to be an active, living, breathing book that produces a return.
Well, talk about, and certainly this is what I see, and I'm curious with what you see, is that I don't see a lot of tracking of,
No.
of the metrics. Therefore, to even say, well, I had X number come back to me, what's going on with that?
Well, first of all, they didn't even track it through their CRM, right? So
Sure.
whether the company had it or not, because we'll hear, well, I need a better CRM and a better tool, and the
Sure.
best CRM is the one that you use.
Yeah,
Uh,
true.
it could be literally, and some of my better loan officers are still using Excel spreadsheets. It's fine as long as they're continually putting new data in all the time. The
Mhm.
beauty of that now using integrated CRM systems is
Sure.
that other people can look at it, and then you can, in essence, put AI tools that are going to tell you, I know when like a trigger lead type aspect,
Hmm.
it's down to the level now you could actually get geocoding to know if someone went to an open house on a weekend. There's incredible creepy data that's out there that is but as good as the data that you've put in. So every time you
Correct.
call the client, if you don't put notes in the system and you don't put a future action on, it's a dead database, right? Nothing is happening with it. So what we have been frustrated with as a leader in a company over time is, even if you take the extra steps as a company to say, sure, you can send a birthday card, but more importantly, it is their birthday, call them on it, send them a text,
Yeah.
do something, right? Or it's the annual review, one of Dave Savage's favorite topics here,
Yes.
AMR,
Right.
and we build that into our systems. We actually send out queries, but loan officers don't always look at their database to say, oh,
Yeah.
they actually filled out the questionnaire. I mean, it's astounding. So you have to be able to be on top of it and take every one of those opportunities to cross sell. And you know it from, has banks known about it for years, that about, well, I pay you differently. I'll maybe even pay you less on a cross sell. We should be paying you more. because now you're coming after that client and thinking of all the other products you could sell them. And the opportunities that you don't have to go all the way to Wells Fargo where you're making up accounts. It could be just real cross sell of all of your services and all the people you know in your financial planners, your CPAs, your accountants. If you can refer names out, they refer names back to you. That's the best value that's in a book, is
Yeah.
your ability to create, to be a catalyst for everyone in your circle.
So talk about this issue of when the loan officer, is this a difference between the better originators and the not so the below average originators, that who seems to work their book of business? I mean, some of the things that I see is that it does seem to be across the board, but I'm curious on what you think.
Well, the top originators, if they understand how much they can realistically get to. So that's where you
Sure,
create the teams and saying your team members can call on your behalf if they get to that kind of level.
sure.
But frankly, the ones who have been able to, especially those who are top producers over time, it gets tiring to work the same first time buyer realtor market over and over again. You should
Yeah,
mature with your book. And as they
right.
mature, their needs change. So providing advice to a client, such as tax advice, investment advice, legal advice, you're not providing that. Actually, you're connecting them with asking questions such as, do you have a will and a healthcare proxy?
Sure.
Are you maximizing your 401k? I've looked at
Hmm.
your pay stub and I don't see that. That level of detail and caring
Hmm.
separates those better loan officers, and they tend to get the goal of getting one deal out of every deal. Right. So I
Right.
see that there's at least 7 or 8 deals in every deal. Obviously, the listing agent, but when it comes to all of those other
Hmm.
people I described, that's in that deal. Company, corporate affinity, where do you work? Who's your HR person? We're going to do a verbal verification. That's in there. So all of that data, as you stay in touch with your client, you can see, they moved jobs, what's going on in their lives. There's 1,000 questions you could ask, but you have to
Sure.
actually make the call and then track it, put the notes in, and
Hmm.
create a future action, right? And
Hmm.
many people go, well, I talked to them. Well, how would you know a year later? There's no
Yeah.
notes in the system. And again, you didn't create a future action that's going to keep queuing you up to stay in touch with that.
So when I mentioned that the data is showing that only 20% of the customers actually remember who the loan officer was, 2 to 3 years out, does that show us that it's only 20% of our loan officers that obviously work with, follow up with the portfolio that they've generated over time?
You would think it would track to that because we know we have the
Yes.
80/20 rule as well,
Yes.
that there's so few loan officers who do it who control that much of the business to
Hmm.
begin with. And we know what's even worse with realtors don't do that at all. And that's where I think the
Sure.
real advantage is too, when you tell realtors, I call your clients and I know you don't.
Yeah.
I know you
True.
don't. So I'm never meant talking about you and your name and co-branding you and mention, I'll be
Hmm.
on top of your clients. So the why you see this gap away, and when rates drop, you see
Hmm.
those loan officers who stay in touch with their clients, their production goes up 5x, 3x, 10x,
Sure.
because those clients know to come back, and they've been queued up and said, when rates come down, I'm going to call you. Don't listen to
Yes.
your servicer when they call you. Don't listen to solicitations you get in your email box. Use those as cues to call me, because it reminds them, I'm watching for you. But you have to
Hmm.
remind them that they're doing that. Otherwise, they've
Hmm.
moved on. But that's where
Hmm.
we see loan officers again. If you did 5 deals and that, let's say 20, 30% of those deals then have another deal in them, think about the math. The
Sure.
multiplication is exponential.
Right. Yeah. So talk about, and this is one of the things that I see is that a lot of times the loan officers, they let their company or their lender, in other words, send the birthday cards, the anniversary cards, the same things that have been done for years, frankly. And would you say, and certainly what I would say is that we need to be more proactive and personalized versus another round of emails that are blasted out. What's your thoughts on that?
I see that as, I'd call it, what the corporate view is carpet bombing, right?
Sure.
And carpet bombing
Mhm.
doesn't win the war, right? It
Right.
just softens them up, may keep you slightly relevant, but then it's
Hmm.
the hand-to-hand combat. It's the actually calling in the birthday, using video, using tools like use
Sure.
bomb, a huge way. It's for, I mean, just thinking about that client, wishing them a happy birthday. I saw your kid got into college.
Sure.
Congratulations, right? So the social media connections are huge, and staying on top of that, anytime you're thinking of that client, to look up online what's going on in their lives, so you have leave a relevant message for them about hey, either congratulations or I saw
Hmm.
that you did this. What's going? I saw you move companies. Any of that data is there, right? And you
Yeah.
should have friended
Hmm.
them from day one, and when you were doing their loan. But I think it's the only differentiator right now. Data
Hmm.
in the hands of the larger company. Why are the bigger companies merging and
Sure.
putting the data? Why is it Rocket Redfin? Why are there all these activities happening? You can take that servicing information. You can find out everything about that loan. You
Correct.
can then
Mhm.
buy the data from a TransUnion or someone to get their social security, not their cell phone number and their email, and the
You're right.
different, and know which ones that they use and know which times they actually answer them. You can buy that data today.
Right.
So anybody in the hand, a telemarketer can can pretend to be you, can go after that
Yes.
data. What if you don't have a relationship and you haven't said that you listen, that you care, and that you're monitoring their debt? You've lost that client, and you've lost the ability to ask for referrals too, because they don't remember who you are,
Hmm.
and then you're not calling about yourself. Hi, do you want to do a transaction? It should be, hi, what's going on in your life, and
Hmm.
let me tell you
Sure.
what's going on in the market and where your loan is positioned, and let
Hmm.
me ask you some questions. Just talk about them. Don't talk about yourself.
Right.
Just call people and ask them questions about themselves. That's their favorite subject, to talk about themselves.
How true. Well, I know when we were talking the other day, we were talking about, and I certainly do see this also, is that the very experienced older originators believe their book is worth a lot more than it actually
Mm-hmm.
is, and they try to I guess, pretend that that's something that is saleable, when in fact of the matter is that it haven't worked it and you can't show the data, you really are missing on the opportunity to actually have a really an income over time.
Well, yeah, it's too late. It's by the time people are approaching on that, they've already been downshifting for years.
Yeah,
So
true.
the momentum is lost. The time to
Hmm.
do it is 5, 6, 7 years before you're
Hmm.
10 years before you're even, like looking down the road. What is your career path? What do you see? And knowing, being honest with yourself, am I really mastering the technology and the contacts? And is my rhythm there? Am I falling behind? It's time to share some of what I have, bring in a junior partner who can
Correct.
help keep you at that level
Hmm.
of relevancy, and before the value drops off of your business, right? And
Hmm.
that's where I see it's too late. When people are asking me about it, they're already in Florida, and they're already going, "Hey, anyone want to buy this thing?"
Yeah.
I hate to
Uh-huh.
throw it out, and they're just waiting for the next refi boom. Where the
Yeah.
potential, we have other sharper people who have figured that out and invested in partners, and just brought along a junior loan officer and shown them the opportunity. Hey, if you can help me keep it at this level, I'll keep giving you more and more every year. And then
Correct.
people go, I don't know if I want to give up that much money. He goes, yeah, but your business is going to stay at a much higher level for
Correct.
longer. And then
Yeah.
you're going to get a smaller piece of a bigger business for a longer
Correct.
period of time. So it becomes an annuity. And in insurance, stock brokerage
They all
happened
do
for
that.
years.
Mhm.
But you didn't wait until it was the end. They did it early and brought in a good partner at that time.
Well, you wrote about this actually in the Mortgage Manager Mastery book that you contributed an excellent chapter. And I find it almost incredible that loan officer, the rookie world is always looked at not necessarily on a positive way, but this is such an easier way to have rookies. And
Mm-hmm.
it is the solution set for an industry that has an aged workforce. And so, in your view, I mean, have you seen more of that being done? Or I don't really see a lot myself. So,
Yeah, no, it's creeping back in, because
hmm.
once the refis, that's last 3 or 4 years, when everyone's focusing on expenses, and that feeling, it was hard to, again, usually refis are what we train the juniors on.
Sure.
And now it's getting to that point of saying, well, we got such good databasing and database
Yeah.
management. If I can work this better, because if every day you're bringing in, and another, referring to my buddy Dave there, mortgage orphans, adopting mortgage orphans, right? There's so
Sure.
many people who are there, no one's looking out for their debt. Their loan's been sold how many times? And most of the people, think of all the people who've left the business. Who's
Correct.
managing those relationships? So
Correct.
every day, if you have a rookie adopt, who you're helping them adopt mortgage orphans, that's putting in another 5 names every day into the database, finding
Hmm.
out what their mortgage rate is, their balance, and then managing that. That's a new annual review. The day you put it in, the day you talk to them, that's a birth, right? A year later,
Right.
you're going to follow
Hmm.
up with them. So all that data is there to be managed. You just need an intelligent, experienced veteran there who is mentoring them to walk them through
Hmm.
what the pitch is and to be part of a team. If you're a brand new 25-year-old stockbroker, they want to have a gray-haired person next to them going, kid, I don't know if I'm going to give you all my money. Do you know what you're doing? Oh no, I'm on a team. I'm on a
Yeah.
team, and by
Hmm.
association, there's a credibility that comes with that. So we're seeing incremental. I know we're trying to do that, but we're building our loan legacy program here, and it's something that's been passionate for me over the years. I do think it's a lost
Hmm.
experience, and you'd want to pass all that information, and it's case study information. It's not book information. It's
Correct.
scenarios and people and credibility that comes with it. You want to invoke into that new individual coming on.
What I find with lenders, and I've been passionate on the same talk because it ties together of how do you get rookies. I mean, at the end of the day, you should be doing this as a lender anyway, but if you're not, there's always this issue how to pay for them. And so this is a way that really mitigates that whole problem. But I have found in my conversations with lenders that they can't figure out, in other words, the length of time that the baton will be passed, and then they can't figure out what is that income going to go to that the senior loan officer versus the younger and so it becomes like a stumbling block, which as an ex capital markets person, to me the math is pretty simple to do, and I just find it, is that an excuse or what do we?
Well, I think it's people go in with their heart and not the brain.
Mhm.
And as much as they might love each other in the beginning, you need a prenup. And the
Yeah.
prenup is written as it is an
It's
actual
a
agreement.
contract. Yeah.
It's a contract that says we decided on a 3-year period. So it's
Yeah.
70-30 in my favor, then 50-50, and then thirty
Yeah.
seventy in your
Yeah.
favor. And here's my role. Here's what you get. And you write that
Yes.
I will be part of the, I'm not going to just go to Florida and let you, I'm not just handing it over. I
Yeah.
have to keep working and helping you build this. And your commitment is you're going to show up, you're going to do these things. And yeah, you're going to
Yeah.
make less in the beginning, you'll get more at the end, and you put it in writing. And
Yeah.
with a 3-year
Hmm.
plan, a 5-year plan, but you got to stick to it. And that's where whoever the manager of that relationship
Hmm.
occurring is in there to maintain as a judge or an impartial, go, hey,
Hmm.
you guys agreed on this. Are you on schedule? Are you on target? Are you doing what you
Sure.
said you're going to do? And check in with them and make sure it happens.
So, understanding that, I agree. To me, it's somewhat of an excuse because the math you can figure out pretty quickly. But why aren't more lenders and as an industry? I mean, I talk about this legacy approach a lot, and I just don't. I see some lenders doing it. I don't see banks. I don't see credit unions doing it. I do see some more. I see independent mortgage bankers thinking about it, but not a lot of them, but certainly some of them. Why isn't it more? We talk about the age workforce all the time, and yet this is such an easy way to do it. That why doesn't it happen, Brian? I mean,
I
what's your
think part of it was
spin?
that it was very nebulous. The book is
Hmm.
nebulous, and the
Yeah.
book is worth one thing in 2020 versus another thing in
Okay.
2025,
Sure.
right? So instead of, and that's that, getting people to agree on what that value is, as opposed to an implied 5-year value. What was that
Right.
worth? But also if you couldn't prove that it was a actively living book in a CRM and being worked, what is
Hmm.
it? It's a lot
Right.
of handshake. There's not much there. What's happening now is because of the tracking and the sophistication of
Hmm.
CRMs and the ability to prove this thing. Look, see, to
Hmm.
your point, the tracking. How look these loans, these people, the calls go out, the contacts happen. It's all tracked and booked here, and here is the result. So
Hmm.
if you can really have the input, but most loan officers don't. It's 10-20% of loan officers are really fully utilizing their CRM. And whatever it is, again, could be their own that they keep off record or or
Sure.
it's done through the company. Doesn't really matter. It matters that it's done and active and provable, so that you can have someone come in and sit in your chair and be you.
Hmm.
And that
Hmm.
was for myself. I had as a manager, I kept producing. My production went up because we actually, even though I
Yeah,
was
it's a,
managing more, because I had the systems and we had a book of business, and I got a loan from every loan I took. And my assistant was me, right? So you'd set it up, and instead of saying
yeah.
call me 24/7, it was, this is how the system works. You're going to get,
Hmm.
here's my team, here's what works, and you're going to get a certain level of service, as opposed to dependent on just the personality, because now
Hmm.
it's a business. Otherwise, it's a sole
Hmm.
proprietorship, and it's hard to
Yeah.
sell a sole proprietorship.
Yeah. Well, it does raise a question from my viewpoint, and it's kind of a capital markets topic in essence. Is a book that's not worked of more value than a book that's actually worked? Because maybe you've already in essence, minded those. I'm just curious on your thoughts on that.
Yeah, I see
Yeah.
more. It's because it's so much more than just refinancing the client. The real
Yeah,
value in
sure.
the book is that they have, there's plenty more contacts, and certain, which of them, just like it is on social,
Hmm.
there are 5 people on Facebook, but that one person's got 30,000 followers, right?
Yeah, I got you.
So
Right.
who has people of influence? It's like realtors, that 10-90-10 rule for realtors. All realtors aren't the same. So same with your clients and their opportunity to refer you to other people, and
Hmm.
teaching people how to refer you. That's where I think the real power of the book is. And again, how are we
Hmm.
going to compete with these major database owners? To your point, they can just go through and come in at a really
Sure.
low price. If you sell your loan to Freedom,
Yeah.
they're gonna churn it, right?
Yeah.
Stan's really good at that, and
Yeah.
he'll
Yeah.
offer a really low price, and he'll go off of future revenue to put that
Hmm.
book, to put it in there, and you can't compete as a loan officer with that. So
Right.
you have to get more than just a transactional relationship. It has to be deeper
Right.
than that.
So is the value actually that through the contacting or the stickiness that you're talking about, is the value really that you are updating the information? That's
Yes,
really the issue.
absolutely.
Yeah.
Because it's a new set of problems and issues.
Yes,
If you think
correct.
it's only that your rate, it's rate and term refinances,
Yes,
AI
right.
can do that. There's no value.
Yes,
You're a commodity. It's
yes,
all the other managing, especially that we just went through. Everyone has three, and yet the need for debt is there. What is the best way to get debt? Well, I don't make enough on a HELOC. I don't want to talk about that. Doesn't matter. You're supposed to manage their debt for 7 years, right? If
yeah,
there's 7 transactions that they have more in their life. So I have to be there through any transaction that you have involving debt. And if
right,
that's occurring, then it may take, you might get two bites of the apple in 1 year. You might not get another bite for 5 years,
right.
but you're providing information of the kids going to college. That if we
Yes,
buy a
right.
second home, right?
Yeah,
And you
that's
can
what
refer a
matters.
realtor. Like you turn around, refer a realtor.
Yeah.
It's going to
Hmm.
Florida. The power that comes from monetizing the relationship, I always would refer to it as, we have a whole industry of strip miners who just come in and strip mine. And if you are a
Hmm.
fracker,
Yeah.
you are a fracker, right? And you are going
Uh-huh.
deeper with the same amount of dirt that you had before, but you're getting more out of it. Here we are, the largest energy producer, and yet we had the same country of
Yeah.
the United
Hmm.
States we had, right? That's what it is.
Hmm. Hmm. Yeah, I could go on about this topic. It's really great. So talk about this issue of what it sounds like, and I think I know you do this and you've done it for years, about the annual review is kind of like the basic 101. I mean, if you're not going to do anything, at least do that. Would you
Please do
say?
that.
Yeah.
And that's where, again, going on to, like, so before, like, I've had loan officers still to this day say, well, what will I say? It's like, you don't say anything. You're like, how are you? What's going on in your life? But of course, again, go on to social beforehand. You know what's going on. Majority of people
Yes.
put something out there, even if it's just
Correct.
minimal, it's something. And
Right.
then you ask about that, and how it's
Yeah.
going, and tell me about the property. Tell me, did you finally do that garage over like you wanted? Did you?
Yeah.
And have you ever thought about it buying a second home? Have you ever thought about investment? Tell me about your parents. Why do you
Hmm.
care? I mean, are they in good shape? What's happening with them? Because maybe it's something I could advise in the way of is a reverse. Not like, do we need a reverse, but are they just in good shape? There's so many. If you're just caring and asking about someone's parents would be
Sure.
different. So, and that's all goes into your notes in your section. So every time you go
Right.
back, because you could, as it gets more sophisticated, there's been a change in program or product, or like our system will go through and say, if you have, how much equity do you have? Are you over 62? It'll queue it up. So
Yeah.
now you have a notes. If you could say, tell me everyone who's thinking of buying a second home,
Yeah.
it could come right up in AI with AI now, right? It's all that
Yeah.
information is there, but it's as good as the data
Yeah.
that you've put in and that it's up
Yeah.
to date. So yes, that is the key. Fresh
Yeah.
relationships.
Well, let's end with some, I guess, really success stories. And I can share one first, and you can share one. I just had a originator that was through our sales coaching, and we worked on, this is the first thing we worked on. The person had done 0 loans in January, and just by working on their database, in March, she finished with 9 loans. Are you
Wow.
surprised? Yeah.
Yes.
Well,
Yeah. I mean, I am and I'm not, but it's there. But I'm surprised she stuck in there and did it because a lot of people don't follow through. But
Well, they were the ones I interviewed. So,
yeah,
as you said before I
yeah,
took them, but it was
yeah.
using video as the outreach mechanism and text video, all of that. But and that's in this market in 2026. So, share some of your experiences.
We were pushing contests to do five a day. Just make your five outbounds
Yeah.
a day. One of us would text me. Two of the five got back already did loans in one day. Got 2 loans in one day, making 5 calls. And that's the success
Wow.
ratio was tremendous. So if every day you did that, just did the
Yeah.
math.
Just think about that.
It had
Yeah.
nothing to do with where rates
Right.
are or the client. It was
Yes.
just
Yes.
all of these were undiscussed, pulling apart a need. And also the other issues we've talked about is how debt is increasing, consumer debt, car loan debt is
Yeah.
increasing. People are struggling.
Yeah.
They may be embarrassed and to make an outbound call to you. And they don't want to give up their 3% rate.
Sure.
But someone's got to do the math for them and push them over and go, I know this is killing you, but there are other people like you. You're not alone. Let's make this move and we'll get you
Yeah.
back on your feet. But you actually think of it, you're doing people a disservice if you don't make that outbound and
Yeah.
make that call. So that was some of the stories my loan officers had given. It's like, yeah, I feel better. I don't know. I'm kicking myself for doing it. I feel like I've really let them down. And if you tell your customers are closing, I'm your loan officer for life, and then you don't call them, that's
Yeah.
not much of a partnership.
For sure. Well, I love this topic. I love talking to you. You're great and your experience is fabulous. And so, any last thoughts that you want to share with our audience today?
This is the magic, right?
Yeah,
Everyone else has got the data and can buy the data. So be aware. If you think no one's coming, everyone's coming for your clients and your data, and they're getting better at it every day and using
great.
agents and using all that. So if you don't get there and bring the personal part, the heart and the brain to
Yes.
that
Yeah,
relationship, you're gonna erode over time your client base.
right. And then you don't have anything to sell is what it boils down to for
Exactly.
sure.
Exactly.
So then you have to be 90 as a loan officer. Anyway, so Brian, in case anybody wants to talk to you some more about this topic, how can they get a hold of you?
Sure, you can find me on LinkedIn and connections there. You can call me and text me at 617-462-0863. But you can find me on social as well.
Well, I recommend everyone to contact Brian. He's one of the smartest guys in mortgage lending, and I always love chatting with you. And so I want to thank you for sharing all of your wisdom today, and also to let our listeners know that Brian's topic was actually in the Mortgage Manager Mastery that just came out. So check it out. So, anyway, thanks so much, Brian.
Thank you, Pat.
That was great. So
Good.
terrific.
Thank you, Pat.
Yeah, we could go on forever on that topic. That's for
It's never
sure.
ending, and it will continue to be. The stories are going to be pretty crazy as
Yeah,
people start
no.
finding what people can know, and people thinking I'm the one. And you're like, oh my god, everyone in the world. Because we
Yeah,
were doing that with somebody recently where we like when the newer loan of us saying, hey, here's people who don't like bank. The banks don't go after their
sure
refi.
they don't. No.
And here's a bank that does all 5-year arms. They pay their people nothing. They pay
Hmm.
them not they half of nothing to do a refi,
Hmm.
and I can pull that data. I can get it. I can literally get the cell phones, and it tells you best time to call them is 5 to 7. I mean,
Oh,
it's really
wow.
invasive, but you can get that from TransUnion and have that. So if you want to get to that level in the hands of the wrong person, who's
Sure.
then using virtual tools that you're able to create and with AI, go online, look at this person, find this about, and now make it believe like they know you. Oh my
Hmm.
God, you could do that one by one and just go through an entire book and feed it. So eventually someone will pick that up and get there. And so you
Yeah,
gotta
for
you
sure.
gotta
But
you gotta put a moat around your business.
yeah, that's a good line too. I wrote down strip miner and I like the moat one. It's really is true.
My,
It's incredible. So
my line I couldn't say on this. I told my guys like, if you don't learn, if you don't learn how to frack, you're going to get frucked.
Oh yeah, we can't do that. We'd have to edit
Don't be
that
get to
out.
that part, but it was strip mining. Like, don't be a strip miner.
Yeah, oh,
It
that's
is
so funny.
so,
So, well,
yeah,
love all that you have to say, and you're right on. Like I said, I mean, I'd be glad to do the thing with your managers for if you're interested. I've
yep,
been doing that with a lot of the
yep.
MBAs and
On
all
the
that
book with the
stuff.
book piece too, right? Walking them through.
Yeah, we're coming out. I told you before, we're coming out with a workbook, and so basically it should be by like June 1st is kind of my thoughts. So we'll see. So anyway.
You
Yeah,
got it.
so it's pretty soon. All right. So nice seeing you. Thanks so much.
Thanks, Pat.
And I will talk to you soon. So if you think of any other topics, I'm always looking for interesting topics. So
Will
anyway,
do.
all right. I'll
One of my
see you.
favorite stuff.
Bye bye.
Thanks.
Check out my new book, Mortgage Manager Mastery, where 23 mortgage sales leaders shared their best practice in managing sales staff. The book is available on Amazon and Kindle or paperback.